Let me qualify this webinar title a little bit. I'm actually quite excited to give this webinar, and the reason why they asked me some of the topics that I thought might be interesting to the folks here on FX Street, and I mentioned developing currencies because of my background. I've been trading in the foreign exchange for a long time, but I used to trade in the foreign exchange for more practical purposes than just, well, I don't know if it's more practical, but I used to trade in the foreign exchange for hedging purposes as well as for speculation. And specifically, what I mean is that I owned an import export firm, and oftentimes when you're doing outsourced manufacturing or outsourced services or whatever it is, you have a contract that's denominated in a currency that's outside of your own. And in many cases, the nature of outsourced manufacturing is you may be working with a country or currency that's outside of what we normally think of as the majors. So things like the euro and the pound and the yen. And it got me to the point where I've always been very comfortable with thinking about currencies that are outside of the majors. And I think it's one of the real neglected areas for new forex traders and experienced forex traders alike to ignore some of the currencies that are out there. Now, I want to qualify this a little bit. When I say developing currencies, what I don't mean is I don't mean necessarily countries that are going from underdeveloped economically to considered a first world economy or something like that. What I really mean is currencies that are either growing in liquidity, growing in significance in the foreign exchange, that their economies are growing in significance. And as we go through this presentation, I'll kind of point out in other ways how I would qualify that particular statement, but I don't mean just currencies or economies that have been moving from underdeveloped to first world countries. So for example, you just asked massive growth currencies like the yuan as a prime example. So yeah actually. So although the yuan has some hazards that unfortunately I don't think I would ever recommend trading the yuan yet. Just because of the manipulation going on there, but I don't think that but that's a great example. That's a perfect example of an industrialized economy that's growing in significance, certainly in the world. But I do have to say one of the biggies is it's is it not just growing in significance in the world, but one of the big things that we're concerned about as forex traders is this currency growing in liquidity? So, because if it's not growing in liquidity, then we've got problems. And it would be probably not something that we'd want to be trading. So that's a little bit how I would define this, and I just wanted to make sure that I was very clear going into this presentation. Now, I feel like there are some very clear pros and cons, and they can be summarized pretty succinctly in the following way. So I would say in the pros, the number one pro in my mind is diversification. And I'm going to point this out a couple of times as we go through this presentation. I feel like this is, so I put a little note to myself here. I feel like this is number 3 of the top 5 trader problems out there that Forex traders deal with. Number 3 is that they are not diversified. So, for example, if you were long the pound dollar, the euro dollar, and you were simultaneously short the dollar franc and the dollar yen, you're not really diversified. You're really just long or short the dollar. So introducing new currencies into your portfolio that move that may, certainly maybe influenced by movements of the dollar, just like those currencies do provide a certain amount of diversification. Well, if you enhance your portfolio a little bit with even more choices, then you can help to diversify things even more. And I'll show you exactly what I mean. One of the things that I am a big advocate of, although I love short-term trading like everybody else does, I'm a big advocate of long-term trading in the forex. And one of the ways that I do that is by creating indexes. And I'll show you two examples of indexes that I build where these developing currencies, these currencies that are growing in liquidity, are playing a larger and larger role. So in those indexes that I'll build for myself, just to invest myself, that are easy to replicate. By the way, in case you're wondering, I think the other five issues would start with number one is undercapitalization. So investors who don't have enough cash to be able to really put it at risk. Number two would be undereducated. Number four is hard right edge myopia. So getting tunnel vision based on, I'll see a lot of traders only trading one pair, and they'll get tickeritis, I say, when they're just concentrating on one pair. And then finally, number five is bad money management. Probably most of you are all nodding your head that yeah, you would agree. Those, if not being the top five, they got to be right up there. So the next pro here is definitely volatility. As I'll show you, in the developing currencies, there is no shortage of volatility. There's always, and this is something that matters to me, and I'm sure matters to you. What I love about increasing the breadth of currencies that I'm watching is that I have more trades to take. So, which kind of goes back to diversification a little bit. If you have more trades on at one time, then you probably have a few winners along with your losers, and things don't become as emotionally trying. So the second thing is, or the third thing is, I find them very challenging, and they give me some new insights. So I gave a webinar just the other day on intermarket analysis, and where I was looking at the relationships between things like the Canadian dollar and oil, and how we could use oil to try to predict movements in the Canadian dollar to take trading signals, etc. Those relationships aren't exclusive, and in some cases, these developing currencies have similar relationships, but they will express them a little bit differently, and it gives us more information. It gives us new insights. So that's what I like. Now, so there are some cons, and I think that they're reasonably significant. The first one, of course, is they're big spreads. In most cases, the currencies that we're going to be looking at, you need to work with a fairly large dealer to be able to get access to them. Those are that will provide enough liquidity for you to jump into those kinds of currencies that would fall into the developing category. But they do provide a big spread, and that's just kind of the nature of the beast. So I'm usually not a big fan of trading these currencies on a real short-term basis, like a day trading or something like that. If you're really into that, the place to be is probably the majors, the euro, the yen, things like that. Number two is there's not a lot of news. So we all have our news feed that's open and in front of us all day long. We're watching everything. You can look up the news if you pull a calendar on one of these economies that we're going to look at, or one of these currencies that we're going to look at. You just won't find a lot of things. And I'm going to point out today, with each of the currencies that we're going to walk through, I'm going to point out today some of the news that you would pay attention to, that they're very sensitive to, and that you can find information about. And then finally, well, the counter to volatility providing opportunities that it's risky. So developing economies, and I'll show you one really extreme example with one of the currencies that I love, and yet in the past showed very high levels of volatility and therefore risk, and wiped out a lot of people. It created a lot of problems. So it's as important as ever for you to make sure that you really understand your money management, where your stop losses are, how are you protecting yourself, do you have an opportunity for hedges. Some of these do have futures counterparts that are traded that you can create hedges with. So it's something to really think about as you're getting into these kinds of trades, because they can introduce new levels of risk. So a little background, and then we'll get into the charts. By no means am I doing a comprehensive review of all of the developing currencies out there that might be great ones to trade. Nor is the analysis that I'm going to use the best or the only analysis that you might use when evaluating these currencies that I'm gonna go over with you. It's certainly open for your favorite strategy. I find that a market's a market, and once you understand some of the uniqueness, which in my case or in my opinion, I think one of the only things that we're dealing with in these developing currencies that's really different is, or that might prevent you from using some of your normal strategies, is the spread. So as long as you can avoid that issue, there's some great ones, and I see new ones coming on all the time. So, some of the larger dealers are adding new currencies all the time, which is really great to see. The good ideas for diversification, obviously, and I'll point out a couple of for instances when we go through that. And here's the currencies that we're going to look at. Specifically, we're going to look at the Mexican peso, which does have a futures counterpart, by the way. The Brazilian real, which is a very interesting one for you carry traders out there. The Hong Kong dollar, which is very different than the yuan. And so I find that people who aren't familiar with that particular currency don't know that. So you might find some of those differences very interesting. This is we're going to be looking at the Czech currency and the Thai currency as well. So and in the examples that I'm going to show, I'm just going to be crossing them with the dollar. However, most of these will have other more exotic crosses available with your dealer. If they offer the Mexican peso, for example, you're probably going to be able to cross the peso with the yen or with the euro or even in some cases you'll be able to cross some of these developing currencies with other developing currencies for a very exotic cross and some interesting opportunities. Now, one thing that I would point out, though, is that whenever I mentioned that I was going to show you a couple of ideas around building indexes relative to that include some of these developing economies or developing currencies, rather. And so in some cases, there's one in particular that I use myself as a strategy that you have to create synthetic crosses. So, which is pretty simple. As we all know, in most cases, you can construct a synthetic cross by figuring out what the right ratio is, and then going long and short. So, if you wanted to cross the Mexican peso with the Brazilian real, well, you can cross them with a common denominator, whether that's the euro or more likely the dollar, and you can take two pair and kind of basically replicate the effects of one pair. So that's probably a discussion for another day, though. However, I just, off the top of my head, I was thinking, there are others that you may want to check out on your own. So, the Korean won, Polish zloty, on down the list. So there's definitely other opportunities out there. Okay, I'm going to go to my charts and... Okay, so we're going to look at the Hong Kong dollar first. And hey, thanks for answering that question about the HUF. There are, by the way, a bunch of others. So if you're working with a dealer like Saxo or GFT, is just two that pop into my mind. You can kind of scroll through the available pairs, and you'll find some really unusual ones. And there are more coming all the time. Okay, so we're looking at the Hong Kong dollar here. And one comment I should make, by the way, is that I find that a lot of these currencies, have really only been reasonable for a retail trader to be trading, in some cases, for only maybe a year and a half, 2 years maybe, in some cases even a little bit less than that. So as we go through this, you'll find that when you go back in time to pull more historical data, there isn't a lot to pull from. So I'm a real systems trader, which is why I use a commercial charting application, because I can test systems and stuff like that. I can program them in, and it'll tell me what they'll return. And I'll share a couple of results with you guys today that I think you might find interesting. but because there isn't a lot of data, you kind of have to roll with the punches a little bit, and take it as it comes. So let's start with the Hong Kong dollar. Now, the first thing that probably will pop out at you is that it's interesting that the Hong Kong dollar has been weakening relative to the U.S. dollar, which, as a somewhat or mostly free floating currency that seems like it would be so connected to the yuan, you would think that it would be appreciating in value and we would see a downward trend, but we don't. So this is the first thing that should probably alert you to the fact that, wow, we're not dealing with the Chinese yuan here. Now, one thing that I will say, however, is that market shocks that happen in the Chinese stock market will definitely be reflected here, and so it's a good proxy, I find, for taking advantage of volatility in the Chinese stock market, and we all know that happens regularly. So so this is not a bad pair to take advantage of that kind of thing. One of the things I wanted to do as we look at each one of these developing economies, just point out to you guys a couple of things that you want to look for on each one of these currency pairs. What are they really sensitive to from a news or economic perspective? So, and you'll find this interesting. The Hong Kong runs a trade deficit, not a surplus. So they're very sensitive to changes in trade. So, and by the way, trade numbers come out for Hong Kong between the 24th to the 27th or so every month, just like clockwork. So you'll often find a little volatility right there at the end of every month, where the market is digesting some of those trade numbers and maybe punishing or rewarding the Hong Kong dollar. So the second thing is that they're very sensitive to, or additionally, they're very sensitive to GDP. So let me make a point here. One time, this is a couple of years ago, I decided that I would test a strategy, and I found that a lot of developing currencies, if you will, were falling into this category of they're very sensitive to changes in GDP. And I developed a little index that I was testing on my own for investing purposes that invested in economies that had very high GDP, a lot of growth, so 5% or higher. And it performed really well. And I'm going to give you, for instance, but one thing that I found was that not all developing currencies, or quote unquote developing currencies, are created equal. In that, certainly in the case of the Hong Kong dollar, we don't get that kind of GDP growth that you would kind of expect when you compare it to some others out there. And I'll give you some for instances here in just a minute. The other thing is, so I mentioned that one of the cons of dealing with developing currencies is that they have wide spreads, and this one does. Just as a for instance, it has a 27 pip spread. Now, however, the counter to that is that just yesterday it had a trading range of 83 pips. So if you're looking at this on a more long-term basis or more intermediate term, the spread's not so bad, and it's definitely something that you can stomach if you're not day trading it or something like that. The other thing that I would say, I'm gonna bring up a little technical indicator here, and I'm just gonna show you one of the strategies that I like. Feel free to test this on your own. I think you'll find it very interesting. And I've applied a CCI here. And as we go through this, I'm going to show you a couple of times how I'm using oscillators technical indicators, oscillators, to identify buy and sell opportunities in some of these developing currencies. And one of the reasons for this, and you'll see this, is that developing currencies tend to either have outrageous trends or they tend to be very channeling, which, a channeling currency obviously is great for oscillators because they do a great job of predicting it. So let me give you a for instance here. I'm going to look for one of the trading strategies I've used for years with a lot of success, actually, are looking for price divergences between a technical indicator as an oscillator versus the price of the currency itself. So, and I've showed examples like this before. And one of the currency, one of the technical indicator that I have found as one of those that works really well in the Hong Kong dollar is the CCI. So in this case, you can see that the CCI was making lower highs and up above the 100% mark. So the 100 mark, we're making lower highs at the same time that the currency was making higher highs. So this divergence tells us that the market is overheated, and I have an opportunity potentially to short the market. So, which in fact, in this case, is generally I trigger my trades when I'm using this kind of analysis when the CCI crosses back down below the zero line. So once it had crossed down below the zero line, we were right up here around, it was about 525, actually about 528 or so. So right about here. And we had plenty of opportunity for the currency to drop. Now, when you're pulling this up on your own charts with your dealer, you're probably not going to see as many gaps as I'm showing on my charts. It's not going to affect your analysis, having the gaps or not having the gaps when you're dealing with it on kind of this daily basis. The reason why you won't have as many gaps when you're working with a dealer is that they have a little bit better, because they're making a market for it, they're able to kind of fill in the prices, so to speak. So they're able to fill in the gaps pretty effectively. So, but it's not going to affect your analysis at all. So at the same time, and I'm actually getting to one thing. I hate it when people are presenting on something that you can't really apply to present day. So I'm getting to that here in just a second. But you'll notice right after this divergence and the market bottomed out, we got another one with higher lows this time. So the market was, the indicators telling us that the market's heating up a little bit. However, at the same time, we're getting lower lows on the price. So we're seeing an opportunity here to not only get out of our short, but potentially there's an opportunity warming up here for another long trade, which is what we got. So one more. Currently, although this is not quite as dramatic, but it's still there, we've got a little divergence happening here where the CCI is cooling off a little bit, telling us that trader sentiment is kind of declining at the same time that the market is really going up. And then yesterday, we got a breakout. So yesterday, this currency, or the CCI, actually broke out down below the 0% line. So we could have gone short at the end of the day. So this is, I don't know, getting on 12 hours now, 12 hours ago or so. And the market has since declined a little bit. So and in fact, I wouldn't be surprised if we saw more of that. A lot of you have probably noticed that the equity market futures in the U.S. have opened down today. So they're indicating we're in for another choppy day, and we may get some more of this movement, which is we may get some more of this downside movement here on the dollar Hong Kong dollar cross. Okay, so I wanted to introduce you a little bit to the Hong Kong dollar, and I find it, I would highly recommend it. But I'm going to switch gears here a little bit, and we're going to go across the ocean and start talking about the Brazilian real. And I want to preface this a little bit. So I don't know how many of you are currently trading the Brazilian real, but this is one of those currencies that is not offered by very many dealers yet, but is being offered by more and more. And there's a lot more commentary coming out around it, and there's a lot of excitement going on around this particular currency. One of the big reasons is that is around monetary policy and the carry trade. So you have the Brazilian real. Right now they have their equivalent of the discount rate, or not the discount, but their equivalent of their central bank rate is 11.5%. So there are all kinds of opportunities to cross the Brazilian real with lower yielding currencies, like, for example, the Mexican peso, which may be a great opportunity as a replacement for yen cross pairs that may be experiencing some volatility here in the short term. But so 11.5%, and that creates some opportunity to diversify a carry trade portfolio. So let me digress just a little bit. I love the carry trade. I'm one of these carry traders out there. However, I've noticed that a lot of carry traders get whipped around every time the market tries to correct, because they're basically short the yen against just about every high yielding major out there. So the pound, the Aussie, the New Zealand, and they'll just cross it with the yen, but that's not diversified at all. And so their portfolio is going to look like a sawtooth with just extreme rises with extreme declines, and if they're actively trading it, they could get whipped around really hard. So I did a study one time where this is about a year ago. I looked back at the past 5 years and I said, all right, what if you took over the last 5 years the highest yielding five currencies that you could trade as a retail trader, and you crossed them with the five lowest yielding currencies, and you only used the yen and the pound once. So what would you have returned? And it was very interesting. What I found was that over that 5 year period, and I used 5 years because we've really seen a lot of liquidity in the last 5 years. On an unleveraged basis, it returned 8.5% per year. So that's unleveraged. So if you were even applying 2-to-1 leverage, you could have seen 17%. So that's kind of an interesting study. And one of the currencies that I used to as a high yielding currency was the Brazilian real, which started to really offer a superior interest rate around 2003 or so. You can see when that started to kick in. Right here in around 2003, rates really went through the roof, and we saw this move from 3 real to the dollar to 1.96 or so, and that's actually a move of 10,000 pips. So that helps to make up for a pretty wide spread, which like most of them, it does have a pretty wide spread. The now. So with what I've mentioned in mind, you can imagine that there are a couple of things that we look out for on the Brazilian real. One, of course, is monetary policy, and so you may be wondering what's up with this little correction that we're in right now. Well, they cut rates by half a point on the 18th of July. So we've got a little bounce up as traders are pricing that into the market. And because they're not quite as communicative or overanalyzed as maybe the U.S. dollar or the euro or such, some of these adjustments can be more of a surprise to the rest of the forex than you might see in the majors. So the corrections can be pretty significant. All the more reason for some risk control out there. The other thing is that they would obviously be very sensitive to, if they with such a high interest rate, they're going to be sensitive to things like inflation and employment numbers. So as a for instance, on 7/26, which is right here, the market they came out with their unemployment report, and which was not quite what everyone had been expecting. So coming on top of a rate cut was a not extremely positive unemployment report. And so we've since seen a little correction. Now, this happens on the Brazilian real, and if we got a kind of a long-term bias, then we're probably not overly worried. If we draw a little resistance line here across these three peaks that happened from May through July, we can see we're right there today. If we see a turnaround at this point, it's probably an opportunity to re-enter this particular pair short. Now, one thing that, and then let me mention one other thing, and then I'll leave this currency alone. We'll go to another one. Is that whenever I find a currency that has this kind of trend, so it has pretty sharp corrections, but overall it has kind of this curved trend. I find that one of the best ways to trade it is just to apply a moving average and to the currency, and buy when the currency hits the moving average, maybe breaks through a little bit, but crosses back down through. So here I've put a 50-period moving average on it, and as you can see, it's been respecting it pretty reliably. We're in the middle of a breakout right now, but we'll see how quickly it comes back and whether it does or not. Okay, so a great way to diversify your carry trade portfolio. Let's go to the next one. The Mexican peso. Now, this is actually a favorite of mine. I really like the Mexican peso, and I don't know why. So part of it is maybe because I live in North America. So I spend a lot of time analyzing the U.S. dollar, the Canadian dollar, and the Mexican peso. We're obviously neighbors, and very interested in what moves the Mexican peso. They're very sensitive, so they have a very low interest rate. They're very sensitive to changes in the U.S., and they're extremely sensitive to investments coming in or out of the U.S. So the peso crisis, for example, of not very many years ago, was caused by largely U.S. investors moving out in massive numbers of the Mexican economy all at once. So they've since been able to kind of calm a lot of those things, but they're not completely out of the woods. They're also very sensitive to changes in oil prices. So, for example, since oil prices had started to had started. In fact, actually, let me come back to that in just 1 second. So I'm going to. So this is one of those crosses that I mentioned, or one of these developing currencies that they have an outrageous channeling price pattern. So they just channel within a reasonable trading range over and over again. It's amazing. So I've drawn a potential resistance line here. It was resistance there in January. Market consolidated there again in February. We consolidated again in April. Bounced off of it in June, and then again we're here right now. And what happened is that we're right here in August. And it's right at resistance. And we're getting a lot of choppiness, a lot of volatility. So it might be an opportunity to go short just based off of a bounce down on the off of resistance. However, at the same time, oil prices have been declining, which would not be good for the Mexican peso, very sensitive for that. And so we've been waiting for a more clear breakdown in prices here, or a change in the direction that oil is going. And that's what's likely to confirm our bounce and give us an opportunity to go short this particular pair, which would be strong, the Mexican peso. So interesting insight there, and definitely one that you'd want to look out for. So I have an interesting trading strategy that I'll throw out at you. I'm going to bring up a stochastics indicator here on top of my analysis. And I find that I'll draw a couple of resistance lines across where the market has been consistently bouncing. And I find that if I use a stochastics oscillator, and really there's a lot of oscillators that will work for this. RSI is another good one. If you just so experiment a little bit with your parameters. But in this case, I'm using a 533 slow stochastics. And when I see that the market is up against resistance, beginning to break down at the same time that the stochastics is overbought. So this is a great example actually in January. Stochastics is overbought right there at the end of January. We're right against resistance, begin to break down, so opportunity to go short. Likewise, here in June, we're up against a resistance level based on these consolidations. And at the same time, we got stochastics in overbought territory. Likewise, down into oversold with the market at support. Now, you'll notice as I'm going through this analysis that it's clear that there are plenty of times they get whipped around. So interestingly enough, however, I've been trading this particular strategy for a little bit. And if you test this one, so I put this in a mechanical back tester, and now I don't have a lot of data. You can only go back a couple of years to get really relevant data, but returns an unleveraged return of 14%, which is not too bad. So if anybody wants any detail, by the way, on some of these tests that I mentioned, you're welcome to send me an email. I'd be happy to send you the results and how I programmed the test. If you're like me, one of those guys who loves to get into that stuff. Okay, so let's move on to another one that this is one that I find is very interesting and is representative of one of the other indexing strategies that I mentioned. So when we were talking about the Brazilian real, I mentioned that it's a great way to diversify a carry trade portfolio, and I think that we're looking right now at the Czech koruna, and this is a great one. I kind of hinted at there's a strategy that I use where I accumulate a bunch of currencies that have really high GDP growth rates, and which is a widely accessible piece of information. Looking for currencies that are 4% or higher, or even 5-6% and putting them into a little diversified portfolio that's got a long-term bias has been very, very productive. So just a little hint out there for you. Czech koruna is one of those that I look at. So let me make a comment about this. I love to kind of investigate things myself. So the other day I made a comment that, if I was looking at the relationship between oil and the Canadian dollar. Well, if I drive up to Canada from where I live in the U.S. and drive through Alberta, I'm going to see oil rigs all over the place out in the middle fields everywhere. So I can get a feel for what goes on here. Well, in the Czech Republic, I've made friends with nationals there, and we talk all the time. What's interesting is that entrepreneurship is taking off like crazy. It's almost like you can't lose. People will start any kind of business at all. I have an associate who he started a cosmetics company. No experience whatsoever, just bought some excess inventory that was sitting around, has turned into a wild success 2 years later. So that's always fascinating to me when I hear from entrepreneurs that it's like laying golden eggs. It's definitely something that we would want to take a look at. So one of the things that I always pay attention to when I see a currency like this that has and so by the way we're seeing this play out. If we're just looking against the dollar, we can see that the Czech koruna has definitely been strengthening against the dollar over the last few years, and presents a very interesting opportunity. One of the I do apply the same thing. I mean, it's although it's a very nice trend in the long term, it's also fairly channeling, or just in a downward trending channel. And I can use the exact same kind of analysis that I would use to try to find long or short entries in the Czech koruna that I would try on the Mexican peso or the Brazilian real or any of the others that have nice channels. So you can see here, I'll just give you one example. Looking at RSI, this is a 14-period RSI, just one that I like to use. And there in March through April, we got a very nice divergence where the market was making lower lows, and yet RSI was not confirming that, looking for a long entry, and sure enough, the market popped up. You should apply a Fibonacci analysis to these little runs, and you'll find a very funny relationship that this has with the 61% retracement level. And then, of course, with this particular currency, we've got another little divergence here. So we've got the market trending down a little bit while the RSI is giving us in the oversold territory a little counter signal. So we've got that divergence, and we would expect that this currency is probably going to begin to rise a little bit before presenting another nice short entry opportunity. Okay, so I know I'm running out of time a little bit, and I wanted to introduce you to a few currencies, and there's one more that I want to be able to make sure that I talk about for a very specific reason. There is, but by the way, I would point out that, like most of these developing economies, very sensitive to GDP and monetary policy. Okay, so I've actually brought up I've brought up another trading station here just to get a little bit better. Darn, it keeps disappearing on me. I'm going to stop my application sharing, and I'm going to bring up another application because it had a little bit better view of what I was really referring to. So give me just a second here. So I've brought up a trading station from a dealer just because it showed far fewer gaps than the commercial charting application that I've been using. In this case, I wanted to be able to illustrate a couple of points. So this is the Thai baht. And by the way, this is one of those currencies that I would throw into that GDP index. Great opportunity, very fast-growing economy. And therefore very sensitive to those kinds of changes. So, for example, GDP was released on 6/3, which is, if we go up here a little bit, which is right up here, it had exceeded expectations. We were sitting right at that moving average here. I've applied a 50-period moving average. GDP exceeded expectations, and sure enough, we see the market really respond to that. I first got interested in the Thai baht when I was testing a system, and I just had been throwing a bunch of currency pairs into this big portfolio that I was testing the system on. And the Thai baht just delivered amazing results. And of course, part of that was because it had such a high propensity to trend. So it's one of these currencies that I would look at from a trending perspective. Probably trading with the trend is the way to go, and look for those things that it's very sensitive to, like GDP. And by the way, several of these that I've mentioned that are GDP pairs, if you will, are GDP current sensitive currencies, if you will, are coming up with their next GDP announcement in September. So keep an eye out for them. The Thai baht is an example of that. We're expecting another release in September. And just using a MACD and watching to see which way the market responds to it. One thing that I love about these developing currencies is that they don't seem to price in all the news all at once. So and somebody's stealing a little bit of my thunder here with a great question. The so they don't seem to price in changes like, if we see an adjustment in the dollar or in the fundamentals related to the dollar or the euro or the franc or something like that, we'll see traders react to it immediately and very quickly. Those markets are very efficient, and I find that these developing currencies, the reactions aren't quite as strong. So they tend to they move with these big moguls here, where you can tell I live by a ski resort. With these big moguls, they're just really kind of rolling over and not moving too bad. So the question is, am I looking at the Thai baht differently than we might a few years ago? Yes. So I just changed this to a monthly chart. And as you can see, this was a real problem. The Thai baht was one of the triggers for what people call the Asian contagion of 1997 slash 96. It was a real problem. There was a lot of speculation, runaway speculation that was going on. And here's what I'll say about it is that, sure, this chart makes it look really dramatic. I just pulled up a monthly chart so you can see 96, 97. This is the other side to developing currencies. Now, these are monthly candles. Would you have stayed in this whole time? No. Do you have a diversified portfolio? Yes. There are a lot of ways that we can try to avoid these kinds of runaway problems. And by having a diversified portfolio where we're aware of our risk and we're willing to deal with it, we may not be exposed to the same thing. But to answer your question more directly, if I had been trading the Thai baht back, in the 90s, I probably would have analyzed it in the same way that I'm analyzing it today. And when being proved that the Thai baht was going to correct and was correcting, it's definitely something that I would keep in mind. Now, obviously, we don't have the same risks, or we don't have the risks to the same degree in Asian currencies that we did back then, but we should always be aware of that. What's going on over the last couple of days or the last couple of weeks with some of the unwinding and the carry trade in the yen is showing us that the market always has that kind of stored up volatility ready to spring out and bite us. So you watch out for it. But this is the other side of developing currencies. So I've actually run over time a little bit, but they probably won't kick me off if I answer a couple of questions, if it doesn't take more than a couple of minutes. So if you have a question, please type it in. But while I'm waiting for you to type in a question, just an FYI, my email address is john@pfxglobal.com. And if you would like a copy of the presentation, or I record these video presentations, if you'd like to know where to get that copy, I will let you know. Or if you have any follow-up questions and you'd like to ask me, you're more than welcome. So a question about the gold dollar, South African rand. To be totally honest with you, you kind of have to become an expert in only so many things. I probably couldn't give you a whole lot of insight into the gold dollar other than it's sensitive to gold prices. So I'd probably have to defer on that one. I'm not a big expert on it, which was one of the reasons why I didn't pull it out. But I'd be very interested in hearing any insights that you come up with. So if you do a little research on your own, please share it with me. I'd love to know. But I think that's one thing I will say though is that that's a great example of a currency that's growing in importance and significance. Liquidity is growing, so definitely one that should be investigated and could become part of a productive portfolio. I know that that's true. Like most developing currencies, the big spread, very volatile. I think the Mexican peso is one of the greatest examples of that, and yet that's where some of the best profits can be made. So it's really something that you have to balance in your portfolio and make sure that you're aware of where your stop losses are, using money management, and allocating your assets across a diversified list of currencies. Well, thanks everybody. I'm gonna end my presentation here. I really, as usual, I really appreciate being able to be here with you. You guys are a great crowd and very fun to just bring some ideas to. So send me a note if you have any additional questions or need any other follow up. And good luck trading, everybody. Looks like we're in for a pretty big day again.